Okay, so I'm really excited for my guest today. I'm here with Ashish Gandhi. He's a good friend, and really excited to kind of go into this conversation. So, Ashish, I'm just going to give a high level overview. Ashish Gandhi is responsible for managing institutional, advisory relationships. He's an institutional consultant, and he supports client relationships and contributes to strategic initiatives and serves as the chair of the firm's respect, equity, accountability, diversity, and inclusion. That's called the READI committee.
Ready.
And earlier, he began his career in 2006, joined Boston Trust Walden in 2019. Most recently, it's a tongue twister here, he worked as a managing director in the institutional sales group at Nuveen at TIAA Company, representing Nuveen's full suite of investment solutions to institutional investors across corporate, healthcare, and endowment and foundation channels. Prior to Nuveen, Ashish was head of consultant relations at LMCG Investments, and he's a multi-manager boutique based in Boston. Ashish spent his early career on the consulting side at Aon and Towers Watson and served as an investment strategist at Northern Trust Investments. He earned a BS from North Park University, and he currently serves as a mentor for Year Up, which is a nonprofit whose mission is to close the opportunity divide for urban young adults. Excited to learn about that. I, really am passionate about impact and helping to elevate people. And that's what you're doing today, Ashish. You're elevating people. So thank you for coming on the show. Hopefully you were able to bear with me with getting through the bio. Sometimes it could be, a little bit of a tongue twister, but I got through it. But excited to hear from your own words, Ashish, a little bit about your career background. Would love to maybe go back. You probably do this periodically, but just reflect on kind of your early life, your early career, and how that shaped you. What did you study? What did your parents maybe do for a profession? Who were some of those early mentors that kind of made you think about getting into finance?
Yeah, no, definitely. And before we get started, Joe, I just want to thank you for having me on here. I've had the privilege of watching some of your previous episodes, and I've got to say, the caliber of your guest is pretty impressive.
Thank you.
As they might say in Wayne's World, I'm not worthy of being in this peer group, but I'm certainly very proud to be here and have this conversation with you. And also, yes, I was going to say in regards to the bio, the longer the bio, the more you've done, which just means another way of saying I'm old. But yeah, I appreciate you going through that. So taking a step back, I maybe starting at the beginning. My parents immigrated to Chicago from India in the mid 70s, and I was born shortly thereafter. My parents worked multiple jobs to provide a good life for my sister and I. They emphasized the importance of hard work, service to others, and education. One thing I lacked, however, was a resource to help guide me towards a professional track. So my parents worked in the hospital lab. I definitely knew that wasn't for me, but I didn't really know what would be a good fit. And so, given that I enjoyed marketing classes in college, I thought corporate marketing could be the way for me, and that's what I pursued when I graduated in 2001. However, as you may recall, on the heels of the tech bubble burst, that was quite challenging, as most companies were slashing their marketing budgets.
Yeah.
So I ended up taking a tech support job at a software development company, helping auto body workers, auto body shop workers, and insurance field agents fix software issues. Definitely not what I imagined I would be doing, but I certainly learned a lot in the role. And so, a couple of years into it, I kind of came at a fork in the road, or sort of a crossroads in my career. Thinking about what I really wanted to do long term. And my sister, who was attending Drake University in Des Moines, Iowa at the time, came to me and introduced the world of actuarial science. Do you know what that is, Joel, before I get into that?
I have a high level overview. I think it's related to kind of doing a lot of, I have a family friend that was actually an actuary. So, let me take a stab at it, and I'll be humbled if I didn't get this right. But I think you're doing a lot of statistical analysis and research to see if somebody is correctly underwritten for receiving an insurance policy.
Essentially, yes.
Okay.
It's essentially a risk analyst. And I'll tell you, back then, the way I was sold on it, and I think how a lot of other people who got an actuarial science were sold on it, was that people would say it's what Ben Stiller did in the movie Along Came Polly.
I remember that movie. Yeah, he was jumping
it.
off the buildings with the parachute. Yeah.
Well, the guy he was trying to underwrite was jumping off
Yeah.
the building, right? And he's
Sure.
trying to chase him down to take a more conservative approach so that they can actually approve the policy.
Yeah.
And so, I was always really good at math, and of course, that role sounded really exciting. I'm like, this could align really well, and turn into a true career for me. But what I quickly realized is that the life of a pension actuary is not nearly as exciting as that role in the movie. And so, I started my career, as you mentioned, at Aon Consulting within the retirement group, learned a ton. And it was during my time there that, while working on a weekend, I met a colleague in our investment consulting practice. And, his first reaction was, "You're way too extroverted to be an actuary," right? The joke was, the actuarial joke was that I would stare at your shoes when talking to you instead of my own shoes, making me an extroverted actuary. But
they say too, it's like when you go to a barbecue, right? When you go to a friend's barbecue or a family's barbecue, people are bragging about all of the investments they made. Hey, I invested in crypto, or hey, I own a bunch of multifamily, right? But you don't see people going around bragging about like the life insurance policy that they just picked up, or the long-term care policy that they picked up, right? So it's definitely, it's essential, right? We need to, there's wealth creation, which compounds with obviously with some venture, private equity, and then alternatives, but you need to make sure that you have some type of wealth preservation as well. And a lot of times people do look at all these sophisticated insurance products, but go into the level of excitement, from a 1 to 10, it may, again, some people nerd out on this stuff. Yeah. It doesn't seem like you're the one that is that guy. So
no, definitely not. And again, as you point out, I mean, insurance is one of those things people don't want to talk about, right? Yeah. Similar to even 401k or retirement planning, topics that people are not as interested in. Alternatively, as you point out, you want to talk about the hottest stocks or what's going on in the stock market, or they want to plan a vacation. Right, things that they find more interesting. So the individual I met was pretty instrumental in my career. Started planting seeds about the world of investment consulting, and that led me to eventually move over to that space. And I immediately found that was my calling. Again, for everything we've just talked about here, the world of investments is just so dynamic. And mind you, I joined in 2008. So week one, we're basically going into the global financial crisis, right? The markets are crumbling, and I was like, "What is happening here?" But also very excited to be in these conversations, right? I still remember, I think one of my first meetings with an investment manager was talking about the subprime exposure a manager had in their bond portfolios. Back then it was a unique period where we saw some bond portfolios lose more than equity portfolios. Because of all the subprime exposure that they had within their portfolio. So I stayed in the world of investment consulting, where I served as an advisor to institutional clients. Right, my focus throughout my career has always been on institutional clients, and so served as an advisor to corporations on their pension plans, defined contribution plans, worked with endowments, foundations, healthcare entities, and other nonprofits as well. And I did consulting for several years, and then eventually made my way over to buy-side distribution. And I've been there now for almost 15 years.
A couple things to unpack here. So you had a little bit of a career shift in something that was a little more exciting, right? So actuarial to investment consulting, right? So this kind of makes me think about a period in my life when I pivoted a few times, and I actually took on a role that was supposed to be product management, and it was at a big company. They paid me more, but it ended up actually being product management. But like I was doing a lot of support, and it's the in my experience, it was the most hated job, because whenever something is broken, everyone's yelling at you, and they're panicking because something needs to be fixed. And it's 5 p.m. on like a Wednesday, right? And everyone else is at, the people that are yelling, they're sitting on their couch with their family and having dinner. And they're like, Joel, is this working? So it wasn't, when I thought about product management, I thought it was like building really sexy apps and websites. And there was a point where like I got to build this like dashboard, and like I got so passionate about it, and that hit me that like this is not my zone of genius. I'm not the guy that's sitting behind fixing bugs and tickets. I like creating, I like designing stuff, I like the look and feel of stuff. And then I eventually, took a role that paid a little more, but it was actually like a leadership role, but it was actually something that was kind of in my zone of genius, right? So I'm kind of when you talked about like being an actuarial to now doing like investment consulting, working with the most sophisticated clients of on this planet, that's a huge career shift. So what are we deal with a lot of students that are looking to kind of take the skills and kind of the repository of superpowers that they have and the things that they love doing. What were some of the things, if you could take those things and transfer that to the relevance of getting into investment consulting, what are some of those maybe hard skills and soft skills that helped you make that pivot?
Yeah, I think it's the ability to adapt, right? As I kind of described, I've had many different roles, but through each of those roles, I've learned something different, right? What basically something about myself, what I like, what I don't like, what I'm good at, what I'm not so good at, to kind of help this like perpetual refinement of role over time to get me to where I think today this is my forever role. I'm at my my forever shop. But it takes a lot of these experiences to figure all those things out. Some people are fortunate that they get it right off the bat and they end up at the right firm and the right role from day one, and their lifers there. But for most of us, that's certainly not the case. So I think it's again, constantly learning is just, I think it's very important, right? Kind of adapting to the environment and just refining over time.
What are some things, as just kind of unpacking the investment consultant role? This is for the lens of people that are looking to, maybe they're trying to get into private equity, they're trying to get on the buy side, but then kind of a first step into that, if they were to crawl, walk, and run, is kind of getting into consulting. I've seen that, as a common pathway where there are these shops that do outsourced work for large private equity firms, and there's so many different facets of the work, right? There's the sourcing, the screening, the diligence, the back end analysis. There's operational due diligence, right? So diligence comes out into several different flavors, and those are services that are much needed. And a lot of times these private equity firms, or even just larger institutions, they're completely at capacity with their team. So they need not only additional hands to kind of do the work that's needed, but also maybe expertise that's outside of the purview of what they have developed over the last decade or so, right? So what are some of the common needs that you think are met with investment consulting, and what are things that you think are emerging? I think like operational diligence, there's a lot of firms that do that, and then there's obviously manager selection, and they're using their own in-house team. But again, if you're a Cambridge or you're another institution, you have that network as well, and you have kind of the platform already built. But I guess the question is, how do you become successful as an investment consultant? And then for the newcomer into the industry, what are some of those functions, if you were to break it out into like maybe the back office, the front office, and then beyond that too?
Yeah, I mean, even beyond that, what I would say is that the role of an investment consultant is quite important, and you're seeing that as more and more institutional allocators are utilizing consultants. I would venture to guess that 90 cents on the dollar probably have a consultant associated to it in the institutional space. Maybe that number's higher, maybe it's slightly lower. It's got to be in that vicinity. I feel like year over year, it's increased, because I think in all facets of life, we need an advisor or a specialist, right? When it comes to healthcare, we're going to someone who specializes in whatever our needs are. Similarly here, for institutional investors, whether you have a staff in-house or not, many times it's really nice to get third-party advice on what you might be able to do, on aspects that you might be able to improve efficiencies in. But also, as you pointed out, manager selection or manager due diligence. A firm, again, that these consultants specialize in that. They have deep resources in doing it. They have robust databases built And so they have followed a lot of these managers for a long time. And
Yeah.
I think they've really refined the process of identifying the merits
Sure.
of good investments, right? I can't imagine an institutional allocator probably gets hundreds of emails a day.
Yeah.
So how do you like determine what's real and what's not real? Like, how do you sort through all of that?
Mm-hmm.
And I think that's where the consultant plays a key role. I will say, for many of the younger individuals in our industry that I mentor, especially those that are coming out of school, I do recommend starting on the investment consulting side. I'm obviously a little biased because I started there, but objectively, I find that it's a great place to learn a lot. It really provides you with a strong foundation and understanding of investments in general, but also how different institutional allocators invest their money and the nuances between them. But you also get very broad exposure to investment managers, right? I liken it almost to freshman year in college, where you don't have to declare a major, right? You're basically a generalist, and you go in and you get to see everything. From an asset class level, it could be traditional fixed income, public equities, but it could also be private equity, venture, various other esoteric asset classes. You get to meet with all sorts of investment managers that, again, I think will help inform what it is that what aligns with you.
Mm-hmm.
I recall meeting with small managers, medium-sized managers, large managers, privately held managers, publicly traded managers, and all of those things, all of those interactions, I think, helped me realize what a good fit for me would be long term.
Yeah. On the manager selection side, this is a hot topic. Super sad that I missed you last night, but we learned a lot from the allocators that came to our event. I mean, a big thing that resonates with me is, do what you say you're going to do, right? You get judged on that, right? So if you say you're going to do something and then you don't do that, then that's kind of a big concern. Also, when you're doing the diligence and there's 5 people that you speak to and one person has kind of a concerning piece of feedback, that may, push you to pump the brakes. So, I guess, what are some things that allocators should think about from the wealth of knowledge that you've acquired over the years, and just kind of you advising different allocators? What are some things that they should think about when they're assessing a different fund to potentially invest in them? Obviously there's the pedigree, there's kind of those magical story points of like who the person is, because at the end of the day you're investing in people, even at the institutional level. But then also there's KPIs and benchmarks that you're looking at, right? Some people at the institutional level are benchmarking against the S&P 500. And then some people are just kind of having a bar for like what DPI should be. So we'll love to kind of just, high level, whatever you're allowed to share on maybe the soft kind of characteristics of like what a good manager is. And then obviously there's table stakes in terms of performance.
Yeah, I mean, I think you hit the nail on the head. Consistency is certainly a key component, right? We live in a world where people like consistency, and to the extent it exists, which it probably doesn't, but predictability, right? We want to know like what's under the hood and what's going to work in various conditions. And I think so that's the key for, I think allocators should have a process in place. And of course you refine that process over time, but have a process in place that helps determine what these merits are of these investment managers. And I think that's probably the key. The other thing I'd say is stay the course, which I know is difficult because we live in a world of instant gratification, right? I mean, I can, in simple terms, I can order something online right now and it could be in my house in an hour or 2 hours. I mean, I feel like, 20 years ago, I would have said people are going to get more focused on longer and longer term. And I feel like it's kind of gone the other way. And maybe that's because of just the, data being so readily accessible that it's sort of overload there. But I think patient investors tend to get paid or rewarded, I should say, for doing that, right? Investors who avoid consensus trades that are disguised as innovation. I think those are the investors that tend to do well. And similar to what we would say at Boston Trust Walden, I don't think that any of us necessarily, at least as it pertains to public equities, have a informational advantage. It's more of a behavioral thing that
Yeah.
you're exploiting. And that's where, again, the market is filled disproportionately with short-term sighted investors. And so to
Sure.
you as a individual investor or a institutional investor, if you can take a long-term lens, which I know during certain periods can be really difficult to kind of to sit through, I think at the end you end up getting rewarded for doing so.
Yeah, I totally agree. And I think what you were saying before, there could be larger institutions that do have all of the subscriptions to all of those software platforms, right? They've got PitchBook, they've got
Yep.
Fintrix and all those tools. The problem is, it's great to have all that information, but now it's analysis paralysis. You have so much information that you don't know what to do because it's just
Yeah.
you've been overloaded. So is there someone that's maybe a consultant that can distill that down to say, look, you know
Yep.
what, you're long only. So here's a couple based on our professional recommendation and our research. We've done this and we've been doing this for decades. This is what we think, and this is kind of what we've also done with some other clients. This is maybe what may assess your needs, and sometimes too. Like I think what I asked you in the beginning, it was a solution for like a top-down approach. It's like, hey, let me stuff a bunch of solutions your way, and here's what you do on the buy side, here's what you do on the sell side. But kind of thinking bottom up, it's when you do that, you're like, hey, what problems do you have? Like, what do you need support
Yeah.
with? Maybe I can't help you, because but I need to know what your goals are, maybe in the next quarter, and then also long term. And then from there, once we understand that, once we do that discovery process, we can kind of recommend some different solutions that can probably help you and augment, and maybe also augment what you're also doing, right? You're doing these 4 workflows, but this is not going to replace those workflows, but this augments it as well,
Yep.
right?
Well, again, I mean, remember, this is like you said, it's a solution, and a solution is used when you're addressing like an issue or you're addressing a need, and that's the key, I think, and that's where consultants can be really helpful is identifying how the right puzzle piece that fits into your portfolio based on your needs, right? Taking a holistic approach and looking at, again, depending on what pool of assets that you're looking to manage, but depending on your liquidity needs, your time horizon, what exposures you already have in the portfolio.
Yeah.
I think that's important because, in the public equity space, you many times will see a strategy that's packaged under one label, but performs like something else. Right.
And you also have multiple different types of clients too. Your client could be, maybe a fund manager that's looking for advice to be institutional ready, right? And then there could also be allocators that are, obviously just looking for a pipeline of relevant fund managers that are kind of within their mandate. And then there's also like larger institutions that are looking for like a sleeve, like a vehicle to get access. So there's probably like 5 different flavors of the client. Like, I mean, if you go to LinkedIn, right, who's your customer? There's a job seeker, there's a job poster, there's media, like there's influencers. So there's like 5 different personas, but there's only one LinkedIn, right? So same thing, you want to kind of think about the different personas and then what their workflows are, what their goals are, which can be a nuanced art to balance, right? So
100%. And what's great? I mean, you have specialty firms out there as well, right? There are consulting firms that specialize specifically within a certain asset class, whether it's, alternatives as a broader bucket, private equity, venture, direct real estate, or again, they could be other asset classes that certain firms specialize in.
Yeah, no, that's helpful. What I'd love to do is also go through the exercise of, maybe just learning a little more about Boston Trust, and also just kind of learning about just kind of the typical workflows that you see in the market. Like, what are the typical needs? Maybe I don't know how to organize it. Maybe it's starting out from the selection process down to like back office diligence processes. But, would love to, you're the expert, so would love to have you kind of walk me through how that's organized in terms of thinking through what people's goals are and then kind of plugging through the different solutions to address those goals.
Sure. So, well, Boston Trust Walden, we're a 100% employee-owned investment firm. Basically, we have a singular focus on high-quality equities trading at a reasonable valuation. Right. The philosophy that we have in place is, or our philosophy, I should say, has been in place since 1974 when we were founded. So just a little over 50 years now, and continues to underpin our entire streamlined solution set. And it yields this very consistent performance pattern, right? One in which you can expect us to participate in rising markets and provide protection in declining and more volatile markets, which ultimately leads to strong risk-adjusted results over a full market cycle, which we define as the combination of a bull and bear market. And as you know, that length of time can vary greatly, right? It can be 3 months, it could be 3 years.
Mm-hmm.
And so, we work. My focus is on working with institutional clients across various asset pools. And really, in this role, so suppose, I started my career as a consultant where I was kind of helping identify the need and the gaps in evaluating managers. Now I'm on the other side, right, where I'm actually going to the consultants or to the clients and providing our solution. And I'd say most of our relationships have come through the referral of either a institutional consultant or existing clients that know us know us well. So they're sort of getting this. They're getting this predictability, or as close to it that you can get. And so many times, again, clients are coming to us with a need that they think we could potentially fill within their portfolio.
No, that's helpful. What advice would you have for people that are starting out building their investment firm? So, what are kind of the first things that people need to kind of mentally think about as they're kind of building a practice and building a firm of their own?
One thing I've learned over time is that culture is key. So I'll tell you, when I started in investment consulting back at Aon, my boss, who was also my mentor, had me read a book called The 4 Obsessions of an Extraordinary Executive. It's a fictional book about two competing CEOs, and one is basically eating the lunch. One firm is eating the lunch of the other firm, and so the other firm hires a outside consultant to figure out what it is that they're doing differently that's leading to such great success and client retention. And what that consultant ultimately finds is that it comes down to building a healthy organization that's centered around culture. And so that was the only difference. So the CEO A that was losing more regularly, their approach was basically just trying to hire the best talent on paper, at least, right? Trying to hire from the top tier schools, a lot of type A individuals, versus the firm B that was more focused on kind of diversifying and bringing in different areas of expertise. Diversity in thought. And so again, just coming down to building a stronger culture, one that, that embraced open candor. So the consultant found that, they would having debates internally, but they'd walk away and everyone was fine. They had a very strong mission statement that was basically, started at the leadership level and transcended down and was continually repeated. So in short, culture leads to success. And, I feel like we see this pretty regularly in sports as well, whereby the team with the biggest payroll doesn't necessarily win the championship, right? It's the team that plays like a team. So I would take the same approach in starting a firm as that is making sure that you have a strong culture. You're bringing in diversity of thought and building a strong team. Because I think having consistency in that team is crucial. Again, not to overuse sports examples, but I feel like there we've seen that. I live in Boston, and disclosure, I'm originally from Chicago sports fan. I'm not jumping onto the New England bandwagon, but having lived here now for 13 years, I saw the Patriots go through this amazing run, and I feel like one of the keys to their success has been the consistency in the management ranks or personnel in general, right? And I think that the same holds true for our firm.
No, I think it's true. I mean, when you look at the top teams, I mean, they're led by a coach, right? And there's the coach that kind of drives the strategy, the mindset, and kind of the way to navigate, performing and winning, right? So there was a couple books that I read on performance. There was one that was really good that talked about like the top performing athletes and what they did. I gotta add it as a reference later. But I'm reading a book now with the woman that started Sprinkles Cupcakes.
Yeah.
Really good. Her name is Candace. But she was saying, which kind of resonates here, is if you try to get every customer, you have no customers, right?
Yeah.
So I've seen a lot of allocators and family offices that have come on this podcast, and they do like some type of specialty. So they may have an interest in healthcare. They're going to look at a manager that only does oncology investing, because that's very niche, because that means they have a narrow and very focused and conviction heavy strategy that, to your point, is repeatable, right? It's something that they're going to keep doing over and over again. They get into the best deals because they're the experts in the healthcare space specifically, and then one step lower in healthcare, right? So they consult with them. So a strategic LP could be like a hospital system that's trying to get access to deals outside of their ecosystem, but trying to also figure out not a square peg into a circle, but hey, you know what, this is what I do, this is my zone of genius.
That's
And
right.
these are kind of the potential clients that also resonate with that strategy. But I can't have such a broad approach where it's like, hey, you know what, we invest in everything, and if you're looking for anything to invest in, like, come see us, right? Because it's too broad, and then you don't have anything that makes you different than everybody else. And there's going to be other people that are going to have an edge in certain sectors that you do.
That's right. And you described exactly what we do. As I mentioned earlier, singular focus. We do one thing only, and we strive to be the best at it. We're not trying to be all things to all people. We understand where we fit and where we don't fit, and we're not trying to fit our square peg into a round hole. And I think that's what's led to our long-term client retention rate, which is north of 98%. Because again, we're being vetted already by consultants or another client that may have referred us. So most of the times, clients know what they're getting into with us, which we love, right? We want to have that alignment with them, know that they're in it for the long term. Anytime, I've had calls with prospective clients who have, through inbound inquiry, where we quickly realize that their time horizon was much shorter than what we do, because we're buying companies, right? We're not trading stocks. We're a we have a low portfolio, low turnover approach. We're looking 7+ years out on our holding time. For those shorter term clients, we're just not a good fit.
Yeah, no, absolutely. What are some things on the LP side? So one thing I'll say is, there's consultants that get hired by large institutions, and their job is mainly to say no. Like, that's how they maintain job security. It's just by pretty much pushing everybody away.
Yep.
And, oftentimes it's easier to just re-up on the past fund that's already been working and they've already been vetted. So what should go through someone's head when they're, thinking about either re-upping versus possibly taking a chance on somebody else? Beyond all the data and all the recommendations from the consultants, what are some of the things in terms of the character? You talked about culture, but as an investor, I've seen different large successful hedge funds. They have these thing called an all-weather portfolio, right? When I think about all-weather, that means you as a person are also able to be all-weather, right? There could be the Amazon could be completely out for the entire day, or what was it yesterday? Cloudflare is completely out, right? So beyond, as a result of that, you're still going to be resilient and be able to still perform in all types of conditions. So what are some other characteristics that you've seen over the years of kind of successful investors and emerging fund managers, and then even just kind of the patterns being established as well?
Yeah, well, I have to say, I have less experience in the private market space, and I think it's very different, right? I think most of your experience is in that space, and what you've kind of described here has to do with that. So I think it's a different set of considerations in the world that I operate in, which is public equity, where I think what's important to allocators we work with are some of the attributes that they look for, aside from, again, this consistency or disciplined approach and repeatability of process. A lot of times it's alignment of interest. I found that to be wildly important throughout the course of my career. And when I say that, it's the alignment of interests and incentives, right? And that's one of the behavioral anomalies that, again, we are basically exploiting. Is that, there are a lot of investors that are short-term sighted, that take on a higher level of risk for the hope of higher return in the short term. And that's why a lot of these higher quality companies that we invest in, we can get them at a much reasonable valuation, because they essentially get overlooked. And one of the reasons for that, many times, is compensation structures, right? Most of the firms I've worked at previously, investment teams were compensated based on a combination of short and, I'd say medium term performance, right? Not necessarily too long. So a combination of 1, 3, 5, maybe since inception. But either way, their compensation is impacted by how their strategy is performing. And as you know, strategies can go out of favor, and they can go out of favor for a long period of time. And this is where, we really shine. We stick to our discipline. We don't change our stripes. And I've seen many teams in the past that have changed their stripes because, again, compensation was tied to the result, and they end up getting whipsawed. And obviously the client gets whipsawed along with them. So, being at a employee-owned shop where all of our investment professionals have equity in the firm. More than 50% of all employees have equity in the firm. I think leads to better behaviors in general.
Absolutely. They feel like they feel like a co-founder in the firm, essentially, right? They have a stake in the firm. So that goes to my next question. What are some things that you would recommend, in terms of leadership? How can people develop leadership and influence in the workplace? How can they motivate, new team members to kind of get together? I think the incentives, to your point, are a big thing, but what are some ways to kind of just catalyze the culture? We talked about culture, but how do we catalyze that as a leader?
Yeah, I mean, again, money is always important to all.
Absolutely.
And so compensation is always important, but I think that's just one facet of it, because that can be shorter term.
Oh yeah. I mean, even for me in my career, there were points where I was doing really well, compensation wise, but that wasn't enough, So I think once you hit that certain level of compensation, now it's kind of like, okay, I'm making what I think I deserve. I should be making maybe even a little more, but then you could still feel empty if there's no mission, right? And you don't really feel like you're doing anything meaningful.
That's exactly it. And this is where I think it's investing in your people, right? Taking a genuine interest in determining what it is that they want to do long term, and helping them sort of, build the path, working with them to build the path to that. So, my boss and I, when we do regular check-ins, but, on an annual basis, kind of go through the year. One of the things she always asks me is if I'm happy doing what I do, right? To your point, I feel, again, well-established in my role, in my career in general. I'm happy, in all facets, but I'm still only in my 40s. So got some runway. What's going to bring me happiness over, let's just say, the next 20 years, if I work to normal retirement age? And that's what she's seeking to gauge, right? She doesn't want me to feel like I'm getting stale here, or the role is getting boring. And, I think we've done a really good job of that at Boston Trust Walden, where you've seen people move from roles across different roles. My boss being a great example of that, having spent time on the portfolio management side, now running distribution and relationship management. We've had other colleagues that were portfolio managers, maybe went to trading for a bit, now on our private wealth business. So it's really that is investing in people and their future, right? Not just the last 12 months and the next 12 months and what that looks like for you compensation wise. It's, how are we going to get you to what your goal is over the long term, at the firm. And again, giving them responsibilities, letting them lead projects, I think is great. One thing for me, as you mentioned in my bio, I'm the proud chair of our DEI committee, which we call READI. That brings me a lot of satisfaction. Nice compliment to what I do on a daily basis. It makes me feel like I'm making an impact in the organization and contributing to the overall culture.
No, it's super important. I mean, I got two additional nuggets that I'd like to share too. I mean, my career, there was one example where, this nugget of information is very simple, but it still sticks to me every day when I think about stuff in my life. But there was a very senior, I worked in the media space early in my career. I was doing technology work, but it was for, one of the biggest media platforms that is currently the dominant one. But,
Yep.
met a senior executive there, and media has evolved, right, from print to now digital to now, like, they have algorithms like a stock market where ads are served. So it's you get ads everywhere you go, right? You get ads on Spotify, and then you get off the subway, you see an ad on a display, it's the same ad. So the technology trends, the way things are delivered change. And the only way you're going to survive is change. And that person was like a very senior executive. He's been at the firm for 20 years, and he was just like, look, the only way you're going to survive is change. And I've had, over the last 20 years, I've had like 15 different jobs. So being able to kind of, I think as you grow, in my experience, as you grow in your career, you might still have the same job, but then your job kind of horizontally grows, and you
Yeah.
have more things that roll up under you, and then your title might change, or expand, or obviously they have weird cultural shifts where you kind of get demoted as well. But all of those things, you got to handle those changes
Yep.
and essentially weather the storm. And then later on, when I worked in financial services, I had a really great opportunity to meet the CEO of a large Fortune 500 institution, and this person pretty much told me his career, and he was at the firm for almost like 30 years, and he pretty much wore every hat. He started out in sales, which I think is the most important skills. I think that there's two important skills. I used to say sales was, but I think the other thing is confidence. So if you can sell yourself, sell the skills that you have, and help people understand them very simply, but you also have that confidence, then those people feel also confident as well. But like, this person started in sales. I think he worked in the back office. Did a stint in, like, I think consulting services as well. But like, once you've worn so many of those hats and you really understand the customer, and you've also built those relationships, right? Because part of it also is relationship building. That's how you kind of, like, you build that relationship. You were there for somebody when they needed you. Now, when they're growing, who are they going to pull up with them? They're going to pull that person that they built that trust with up with them to kind of grow in the organization. So just want to share those takeaways, and I'm sure some of those insights might resonate with you. But wanted to hear your reaction to that or thoughts around that.
No, 100%. Certainly resonates. And, tying to your last comments, it's one of the pieces of advice that I give to a lot of my peers in, business development and relationship manager on the investment manager side, is to build these genuine long-term relationships, right? And not be transactional.
Yeah.
You really position yourself as a solutions provider. And also, listen first when working with allocators. I remember it's been several years now, but I recall reading a post on LinkedIn that was authored by, I believe it was someone that worked at a public fund. And the individual was essentially talking about how, investment managers come in and they just ask, right? They ask for a meeting, they ask for more meetings, they ask for money, they ask for more money. And it becomes this like very one-way relationship. And the person was saying, like, at the end of the day, I'm a human being too. Like take the time to learn about me. Like, what is it that I'm trying to accomplish on behalf of my firm, but also as an individual, right? So I encourage them to listen first and see what it is, what the needs are of the allocator, and if there truly is a fit, right? Like, again, if there's no issue to be solved, then you can't really provide a solution. And I think you just have to accept that your strategy is not a fit for everyone, or the timing doesn't work. But you shouldn't be pushy. But in the meantime, I think it makes a lot of sense, again, to build this genuine relationship and serve as a resource to the allocators in any way you can. I regularly share research pieces that we author or that I come across from third-party providers, whether it's some of our peers or just firms that specialize in market research. I consistently share those things with a lot of the allocators that we work with, understanding that it could be value add in their role, right? It doesn't mean that they're giving us more money, but it hopefully helps them in their role.
Sure. No, I totally resonate with that. I mean, I think also when you're building those relationships, sometimes it's also important to just tack on to what you said already. I totally agree with that. But, it's also important to build those relationships even when you don't need to and when you don't need anything. I mean, I had an allocator that came on, this podcast, I think, a little while ago. And, he was in Europe and there was a man, he was just like, look, I'm in town if you want to just catch up. And the manager was like, oh, I'm not in market right now. So, let's not catch up now. But, had he had just gotten coffee with him, given him an update, that first close for the next vintage might be down, might be kind of a little closer in terms of like being at least in the pipeline of the LP's, view. So the best time, even for founders, right, when you want to do fundraising, is try to build those relationships when you actually don't need capital, because you have less pressure on yourself as well, right? You're already, actively just kind of focusing on deploying, so you don't need the capital. But teeing those things up, building those relationships for the long run, I think it compounds over time.
No, 100%. And I think, I think I've mentioned this to you when I first met you, like introduce me to anyone you want me to meet, whether they're in the industry, outside of the industry, what have you. And I say the same thing to other friends. And so, I'm constantly talking to people because I feel like I'm learning from them. And again, whether it's industry or non-industry, I'm learning from them. But the other thing I love doing is connecting people, as you know, right? I want to learn about you. I want to learn what your aspirations are. And to the extent someone in my network can help you achieve those goals, I want to be able to facilitate that introduction. So, I've made a couple introductions to you and other friends, and many times allocators will come to me. Allocators that cover a different asset class will come to me and maybe ask me for a recommendation of who I know in the space and think highly of, because I feel like I've built trust and credibility over the years.
Yeah, and I think that's super important. I really appreciate all those connection points. And I what I noticed about you is you do things just because you want to, right? It's not because there's some like keeping score. I posted something a while back about just keeping score even in your like romantic relationship, right? Once you do that, that's not a good thing.
Yeah.
Because your score is going to be on the negative side anyways, no matter however you try to keep score. But I think going about life, kind of living abundantly, just want to kind of, wanting to also just add value all the time. I think the returns will just compound, by tenfold, over time. So I think I totally agree with you. Just kind of being generous with adding value, is totally the way to go. What are your thoughts on reverse mentorship? So I think for me, we always think of mentorship as, hey, let me talk to this big brother or big sister that's 30 years older than me. They're going to shed a bunch of wisdom. But there's a trend now where people are trying to learn from the tech savvy people, the people that are, Gen Zs that are doing things that skip 3 to 4 steps of, the current way that you do things. So I think there's a lot of value in surrounding yourself. You have this mentorship program where you're helping young professionals grow. But to your point, there's a lot that you can learn in terms of like, hey, what's the software platform that they're using? And there's AI tools now that can like do a lot of things. So those people just definitely have a lot more of the pulse on those things that we may not.
That's exactly right. It's a two-way thing. I feel like anyone, I learn from my mentees as much as they learn from me, for sure. It's everything you just described. Like, what are the trends? Like, help me understand the rationale. Like, how are you're thinking about things different than I'm thinking about it? Just walk me through that. That helps me evolve. And I think that's the key, right? In life, like having more data points. It's similar to what these tech companies are doing, right? Data is their greatest asset. As human beings, it's sort of the same. Having as many data points as possible, I think, makes you more well-rounded. And so, it's definitely a two-way thing. And additionally, like a lot of the younger mentees teach me a lot of the lingo. I have 9-year-old twin girls, so even though there is a generational gap between the two of them. They're closer to my kids in age than I am, and so they can kind of keep me up to date on what that generation is saying.
Yeah, no, I totally agree. And you listed a pretty interesting book. I posted that. Are there any other books that are on your reading list that you're currently reading, or that you'd like to share, or that's on your list? I use Audible a lot.
Yeah.
There's one book that I'm reading right now. It's a physical book. It's Michael Sonnefeld's book. So he's the founder of Tiger 21. So I think he's got like 21 lessons. And like, I mean, I don't know if you know about his community. You probably do, but to get into his community, you have to be worth 10 million at least.
Wow.
So there's a lot of nuggets in there. So I'm like, it was given to me, and I'm like slowly flipping through it. But I do Audible a lot because I can kind of listen to it while I'm running. But what's on your list that you'd like to share?
Well, I want to read 1929 by Andrew Ross Sorkin. I haven't read it yet. But it seems to be getting good reviews, and obviously very timely given what's going on in the market right now, and all the rhetoric around it feeling, well, more people likening it to 1999 than 1929. But either way, talking about a lot of rhetoric around another bubble, and I think that would certainly be interesting. Rich Dad Poor Dad, I've always kind of subscribed by some of the tenets of that. Right. I do believe it's not about a matter of how much it's earned. It's a matter of how much you keep.
Yeah.
And that's where I see a great deal of philosophical alignment between, myself and what we do as a firm. As I mentioned earlier, participating in rising markets and then providing protection in down markets, I think is how you get ahead. It's not as sexy of a course to getting there, but I think you well,
they say, to your point, right? They say time in the market versus timing the market, right? You can never really time the market, and unless you're like a quant trader, like if anybody watches the show Billions, right? The quants under the PM, they're essentially trying to time the market, and they have a psychiatrist that they meet every morning to kind of get through that. But it's really, to your point, time in the market, and handling the volatility and being able to use that as a tool.
That's exactly right. As I mentioned earlier, I think patient investors tend to get rewarded over the long term.
Well, we got a couple of minutes left. I mean, the final thing that I always like to end the note on is just having you reflect on some of your mentors. They could be family members, they could be past bosses, just role models that have been there to do that, periodic mentorship session with you. So any kind of wisdom that you want to share from just any of those people?
Well, I'd say so. Earliest influence is my parents. They from day one, they instilled the importance of hard work, education, and service to others. And the service to others piece, we've kind of touched on this already, is so important to me. Right. I kind of live by the mantra. What was it? I think it was Muhammad Ali that said, service to others is the rent you pay for your space on Earth. I have that stored on my phone. It's sort of like a daily reminder to me, and that's how I live my life. Right. I really like helping other people. Hence why I love the role I'm in, because I get all this interaction, right? Versus being an actuary sitting behind a desk, it's just me and Excel all day. Which was fun at times, but not providing as much personal satisfaction. And here I get to meet people of all walks of life and truly feel like I can make an impact, right? Whether it be here in my community, at my firm, or even on a more broader scale. I feel like those interactions lead to an impact. So I love that. And then in terms of wisdom, I might share what I share with the people that I mentor is be patient, which again is tough, right? We've talked about this, and again we're in this world of instant gratification, so it is really tough to be patient. But I think you get rewarded for being patient in all facets of life. I'm sure you've seen the chart that illustrates what success looks like, right? It's not this linear line going upward, but it's more this squiggly line that hopefully at the end ends up in the upper right quadrant where you want it to be, or at least close to it. And I think I think being patient is critical in that, right? Stick to what you want to do. Again, I regularly have this conversation with my mentees. Obviously, in early years, there's a lot of refinement as they're trying different things and figuring out what they want to do. Once we sort of lock in, my thought is let's stay the course towards getting there. Sometimes they'll get a little antsy and want to jump ship to another shop just to make a little bit more money. But it's in a role that's not necessarily, it doesn't make sense. It's not in line with what they want to do long term. Yeah. And so again, I emphasize to them, try to think long term as possible, right? Life is more like a game of chess than it is a game of checkers. I think you just really, to the extent you can, try to take a longer term approach and really just kind of stick to what your goals are and work towards that. And for some, it happens really quickly. And for others, it takes years and it could take decades. But it will happen.
Yeah. And I mean, one thing I'll extract from, some of your storytelling is, never to have any regrets. I think you having that first actuarial experience, it's probably made you much more data driven, much more analytical, amazing with numbers. And then, the support role is something that's near and dear to both of us, right? I mean, my support experience, but what do you have to do? You got to put out fires, you got to deal with clients that need the support. So, a lot of those things have shaped and formed, the DNA that you have. And, one of my favorite analogies, I mean, I think Steve Jobs shared this one story. It was like an analogy where like there was a guy next door that had this rock smoothener. And it was like this, it's like this cylinder, you throw a bunch of rocks in, all these jagged rocks. But if you turn the cylinder, those rocks are rolling in the cylinder and then eventually they smoothen out, right? So in the beginning of our career, I feel like there's a lot of these ups and downs. There's been times where I was not happy in my role, but like, those jagged rocks help you, formulate, who you want to become in it. And we're still doing it as we're still going through life. So, so resonate with all the things that you said.
And what's great, I think, is that there's so many resources now available to this generation that I just didn't have, or I wasn't aware of, at least growing up. Right, access to information wasn't the same back then as it is today. And I do think a lot of these programs that I'm seeing today and participating in today weren't around back then. Yeah. So I encourage anyone or everyone to take advantage of the resources that are out there, whether it's formal programs or individuals like you and I, right? Yeah. Anyone who's listening and interested, please reach out, and would love to learn more about you and see if I can help you in any way. Happy to do so. But that's the key, that there are a lot of resources out there. And I think individuals should take advantage of that.
Yeah, no, absolutely. And I mean, just a funny anecdote, just, as we end over here, but, I was watching the old Eddie Murphy movie, Daddy Daycare. And I was watching with my 8-year-old, and he's like, "Oh, I need my beeper. Someone's going to page me." And my 8-year-old son is like, "What's a beeper?" Yeah. And I remember having a beeper when I was in college, so I felt a little embarrassed about that. But it's like, who knows what we're going to have when my son and your daughters are in their, late 40s, and maybe like a hologram or something. Yeah. The whole form factor of a phone may be gone, but being able to handle that change and adapt and be able to kind of still immerse yourself in that change, I think is super important. And I think an important theme with this conversation. But anyways, Ashish, thank you so much for your time. This was an amazing chat, and appreciate all that you're doing for the community, supporting all the emerging people trying to develop themselves and figure out where they're going as part of your firm, and also personally too, as a mentor to the community.
Yeah, no, thanks for having me on. This is great.
Thank you. Well, take care, and everybody else have a great day.
Thank you all.
All right. Bye.